Okay. Good afternoon. Good afternoon. I'll start off with this. You might see I have this mic here. I tried using it for one of my videos, and I think it sounded way worse than the mic that's on my webcam. So, hey, is what it is. I'm just going to keep using this one, but if my audio is not sounding good, let me know. I mean, I know it's not going to sound good. Don't get me wrong. But if you can't hear it, paste a comment. I don't know. Or if you think I should try to do something else, with the audio, let me know about that. Okay. So, what happened today, really? It was a roller coaster a little bit, because at the start of the day, we had gold going above 1900. We had the dollar going below 90. We had silver off to the races above $28. We had the NASDAQ particularly putting on a solid gain. And we had the S&P 500 positive, and I think the Dow was positive at one time during the day as well. Even by, a couple hundred points. From the high, we fell about 200 points today, and we finished down 152 on the Dow, which was the loser of the day. And why did this happen? Well, I did tell you earlier in the day that I saw the 10-year yield reacting the way that it was, going significantly lower. And I said that seems to be some sort of fear reaction in the market, and we could see some pressure falling on stocks. However, crude oil was higher earlier in the day, which put a floor under the market. However, as the dollar rose back above 90, we saw oil give back, we saw gold give back, and we did see silver give back. Although silver still ended up about 0.5% today, which, again, nothing really for silver, but I mean, fractional losses for the metals as a whole. And actually, some of the silver stocks I own were up today, Pan American Silver being one of those. PAAS is the ticker. Okay. Why did we see this drop in the 10-year yield? Because that is what my eyes were glued on. I mean, the dollar going back above 90, it's all part of this fear reaction in the market. The one thing that I found that was being pushed by the media outlets that is a recent story is this new Delta variant, they're calling it, of that which shall not be named. I've heard that if you mention the thing, in YouTube videos, they kind of, I don't know, they just don't like you quite as much, especially if you're speaking on one side of it. And I'm of the opinion that this whole scenario was manufactured to help the rich and to hurt the poor, hurt the middle class. That's my overall view on it, and I would have to do hours of footage just to get through a fraction of why that is the case, the history of why it's the case, how it comes to be, blah, blah, blah. But that being the backdrop, we see invariably fear and greed being pushed by the mainstream media, trying to get you to follow a narrative. When I see something being pushed by the mainstream media, I immediately think opposite. And most of the time I'm taking the opposite side of that trade. So the media, the Fed, comes out and says inflation is transitory. I'm taking the opposite side of that trade. I don't think inflation is transitory. I don't think it's going to pass. I think we're going to be into stagflation for years, if not decades. And how hard that stagflation is coming, you won't even be allowed to know, but it's going to hit you no matter what. And this is one of the most noticeable things. If you just open your eyes to what's really around you, close your eyes to the media, close your eyes to the numbers. The media is the real thing that has poisoned our minds. And, obviously I'm not out here saying the thing isn't real and that the thing didn't kill a lot of people. That is not at all what I'm saying. What I am saying, though, is that this new variant, this Delta variant that's being, pushed out by the mainstream media outlets is causing a fear reaction in the market, and that is why you saw stocks finish slightly lower today, and the 10-year yield specifically finished lower, and oil drop off of reduced demand. And we're going to talk a little bit more about that, because that's an absolute joke. I mean, it was a joke before, it's a joke now. But So what's we saw the 10-year yield rising actually during the day, but then it dropped back down, and so to me that was the big movement today. But let's just get to the oil right now. I mean, I have an article up here. U.S. oil prices end below $70 as domestic gasoline supplies jump, fuel demand falls. Now, I remember just yesterday, maybe 2 days ago, I came out and had an article up here saying oil is rising because of increased demand. You see, this is how they use data to manipulate your mind. They come out with one article saying the demand is increasing, and they give you a number, of course, because everybody works on numbers today, statistics, you know. They give you a number from here, but then they come out the next day, they give you a number from here, saying that the gasoline demand is falling. Not understanding that who's actually buying the oil, who's propping up the price of crude oil. It's not us going out to the gas station causing the price of crude oil to go higher. That is absolutely none of it. The mechanism is big banks, other people buying up crude oil futures, and that's that. Again, the real price of crude oil is multiples lower than it is now. And maybe you remember last spring when the price of oil actually went negative. All right? So that's what can happen when the market is actually allowed to correct itself a little bit. So let's put it all into context, though. What does today really mean for where the market's going in the future? Well, I can't say that the 10-year yield dropping and the dollar being above 90 doesn't scare me a little bit, but it's going to take a lot more to really. It doesn't ever scare me, but it's going to take a lot more to get me to change my outlook on this market, which is that it's hyperinflating and it's going a lot higher. That being said, what kind of things do I trade? I trade options, and within options you can do credit spreads, you can do naked calls, you can do a bunch of different strategies. I am, with regards to the market itself, in relatively not risky contracts, options right now, because I want to see this play out. I would love to see a big drop in this market. I really would. That would be a huge buying opportunity, because I think there's a lot of kind of things building with this new variant, with the dying economy and people realizing that inflation is real. I think seeing the market peel off a little bit here would be very healthy for the market, not for people, but in terms of what we're looking at, I think it would be a healthy thing to see. I'm not shorting the market, not one speck. Okay. Expect something with crude oil. I mean, crude oil has been on a tear, so it just technically it would make sense to see some pullback of some sort right here, but you have to stay on the long end of this market. Period. End of story. I mean, it's not going to change. See, one day doesn't change the situation, okay? One bad trade doesn't change the situation. You always have to keep your head straight and say, why am I trading? What am I here for? What am I doing? What is the big picture, okay? And it's a lot easier to get rattled when you don't have the big picture like I do. Even if you might not believe it, I stay consistent on this big picture of why did this thing happen and why is this new variant suddenly popped up out of nowhere. And it's apparently like 60% of the cases in the UK now. And we don't need to even. I don't want to go into anything related to my thoughts on the thing. And maybe I will on my website, but on YouTube it's just a no-no. I'm not going to do it. I've probably gone far enough with this. All right, I think that's pretty much enough. We're still watching for the dollar to go below this 90 level. We're still, waiting for a couple of things to manifest themselves, but there's nothing to tell me that this strategy isn't going to work of holding precious metals and buying the equities as well and being long the stock market. I mean, we saw nothing today, okay? So, and then let's get to cryptocurrencies. I mean, they have been volatile, but they're still nicely higher. I mean, Bitcoin is above 36,000 again. I mean, it was at 31,000, a couple of days ago. And so, it still was within this consolidation range. But again, I think if we see the dollar fall, it'll be a very positive sign. That's about it. The economic data that came out today was right in line. Wholesale inventories 0.8%. I mean, whatever. That was a nothing burger. So ultimately, it's either technical action or it's this new variant putting some fear into the market. And based off the 10-year, I think there's a little bit of fear being injected into the market on purpose, by design. Why is it being done, and how can you take advantage of it? That's what this channel is about. And I hope to see you tomorrow morning. This is a really pretty interesting day, and it's only going to get more interesting because this world is crazy. All right, I'll see you later. Have a good one. Like and subscribe.